Hey, what's going on, everyone? Welcome back to the channel. Welcome to the live stream. Welcome to Dano Crypto. On this channel, we show you guys how to make simple, effective, and easy moves in the cryptocurrency ecosystem. So we had a big liquidation event happen today. We had Bitcoin, and we have Bitcoin consolidating down, retracing into some areas that we had been kind of predicting on this channel. And so if you are also following inside the Telegram group, call group, and also in the Discord, we had been talking about the order blocks on the daily and on the 4-hour. So if you want to be following this same type of technical analysis, what you need to do is go to Trading View, click on Indicators, and then you're going to type in Order Block Detector. And so what that'll do on the 4-hour and the daily is give you places of support and resistance of where a range has been established for certain coins, or anything for that matter. And so the key areas that we were calling was 85,007, which was a high liquidity area where Bitcoin was sitting and where we had bounced previously, and then also 82,003. And so we said these two order blocks will most likely get broken through, and it will be the bounce point for the consolidation of the finishing phase of the Wyckoff accumulation. And so what is happening here is we have the Wyckoff accumulation. Now what it does is it has this little ear at the top here, this little flag, and it consolidates down. What it does is it creates this kind of what looks like a W pattern. It kind of chops around a little bit, but what it does is it'll go down, hit a low, hit up back to a high to try and hit back into some previous resistance. Then it'll go back down, and it'll kind of do this W pattern where then it establishes another low, and then it goes up from there. And we noticed this a lot last year. We had a lot of Wyckoff accumulation, distribution, and things like that on certain altcoins. And we saw how it ended up playing out is that once it hits that second low, which is represented by this first one here, which is at 81,000, it could be a lower low or a higher low, and we've seen it do both times where even if it was a higher low or a lower low, then it still went up to test into the top range of the W, which is around this order block of around 98,000, 99,100K. So if you're looking for some prices where you think where we can think Bitcoin would be going now, it's about 82,000. If it hit that order block, there's more high probability chance that the market gives us max pain and takes the money instead of giving the money, because they're not going to give the money right now. And it really showed in terms of people that were long or just any types of collateralized loans during the October 10th liquidation event. That was apparent that they are ready to wipe out the entire market first before they pay everyone. So this is what is happening right now in terms of Bitcoin, and hope you guys are doing well. So let's look now at gold and silver really quick, because today we did release a video on why gold and silver pumping like it's been doing is a good sign for digital assets. And we've been pulling up this chart a lot recently because it really shows that the next phase in the new money system is going to be powered by gold, silver, Bitcoin, and Ethereum. And so these are going to be the top 4 assets going into the new money system. And I think all the volatility that we're seeing right now is just the unraveling of the old money system, which is fiat currency, debt, bonds, the treasury T-bills, and all that shit. Like, that is obviously being unraveled and going into a new Fed. This new Fed is going to probably be where they're already operating probably shadow Fed. And Jerome Powell is the last final boss to get us into true quantitative easing, because technically we're supposed to be in it right now, but they're not cutting the rates. So we're technically still in tightened. We're not in QE. They're tightening. And the Fed seem to think that the labor market is fine, which we know is a lie. People are getting laid off. People who have master's degrees can't even get a job at Target. So we know the jobs are a lot worse than what they say. They could have already been cutting the rates and doing the whole printing the money thing like they always do, but they're not doing it. But they're doing something different. They're repoing the banks. They're sending money into the banks overnight while no one's paying attention, and banks are insolvent. They don't have enough money because they're offloading all of their dirty cash into what? Gold and silver. And then what's the next rotation? They're going to keep buying gold and silver. We were thinking that, okay, what's going to happen is they're going to dump the gold and dump the silver and then buy digital assets, just the rotation. And because it started with the stock market, and all during while the stock market was pumping all-time highs, and the Mag 7 and all these different things that have to do with AI, tech, good quarterly earnings, NVIDIA, this gold, they were buying gold and silver at the same time too. So something's going to give, and one of them is going to be the real estate market. Real estate market is going to be going down. That has to readjust. Someone's got to lose. In the real estate right now, someone's got to lose. And that's a good point to make. I remember I heard someone who's really smart on real estate on YouTube was explaining the situation. He's like, look, someone's got to lose. Something's got to give. It's either going to be the owners who are holding on to this particular price they think their house is worth, and they're going to have to sell it because they're going to start to see the comparables of what's happening, and the market continue to go down. They're going to like, shit, they're going to be short selling stuff. That's going to cause the market to go down. And then look at what's happening. Oh, perfect. You got silver, you got gold, pumping all-time highs. You have profits that can be taken from these markets and the stock market to then buy low crypto and real estate. Perfect. It's like the perfect setup. So if I was like was in that game, millions of dollars, you have known the system like that for years and years, you would see that as the rotation. Why you'd see like why is this happening like this, to where it seems like a rinse and repeat. So a friend of mine told me it is a game. It is a rinse and repeat. They perfectly time the stock market with the real estate market, with how the feds are doing their interest rates and how that generates trickle down for mortgage rates and lending rates and all of that. It is a game of rinse and repeat. They bring it down. They're the ones that cause the problem and the issue. They come in with the quote solution, and they're just buying the dip of the quote crash that seems like they want to make seem like it's going to be forever. And then we've seen a chart where the stock market will only go down, like the crashes are 50%, the recoveries are 250, 300. So if you DCA through the entire crash, you will still make a return holding it for then the next 2 years. It's the same with crypto. It's the same with crypto. It's like crypto, we've had these phases, these cycles, altcoin season. We have 2 altcoin seasons technically of when we've all came into crypto. Anything before that was like OGs, true cypherpunk people that were just like on the fringe. But people started to come in like regular normie people in 2016, 17, 18, kind of pre-COVID, to kind of start to talk about it a little bit. And then really people came in 2020 after COVID in 2021. That's when like the world kind of started to think about and kind of put their eyes on crypto instead of just the fringe. And so, man, I just think to myself, this is the perfect setup for crypto people to like pivot out of being bullish crypto and say, oh, let me just like full port gold and silver right now because I feel like an idiot, blah, 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 for not buying it for the past couple of years. So, and someone asked on Twitch, shout out to all the people who are watching on Twitch, why is Bitcoin dumping? Well, Bitcoin is dumping because the comments from Jerome Powell were not as bullish as we would have liked them to be. They're not cutting the rates. They're not signaling for cutting any rates for the next 2 meetings of him being in the Fed chair position. So that just means tightening. And so, but what they are still doing is, like I said, injecting cash into the banks. And they couldn't, and also he couldn't comment on gold or silver pumping. He says, oh, it's no threat to the dollar. I can't speak on the dollar. It's like, what do you mean you can't speak on the dollar? You print it. What do you mean you can't speak on the dollar? You print it and set the interest rates for what people can lend out your freaking dollar that you print. So it's pretty wild. So this is what, so if you've been watching this channel, I told you guys the reason why Bitcoin might go down to these levels, and we'll pull up the chart really quick, is because of those freaking order blocks, man. Those order blocks, like I said, are very telling of where liquidity will sit. And we've seen where a lot of liquidity was sitting down here from the previous market liquidation of October 10th. So during October, we had a big liquidation level. It was mainly the altcoins. The altcoins got hit the worst. Like we went down to 2022 levels of altcoins, and it destroyed a lot of people. It actually made a lot of crypto companies go belly up, and they're still going bankrupt right now. So like, Tom Lee gave a perfect example. He's like, there is going to be still another second flush of the market because that wasn't it. It's like it wasn't over yet. The market will always try to claw back the liquidation or the losses that it had, and then it's just going to go right back down into that next level. I don't say it's like it's a guarantee, but he said, man, you really think they're going to give us that V-shaped recovery? Like, you know, just the V-shape, like we're going to get from 126 and just be like this? Like they're just going to be like, oh, let's give it to you so easy to go right back up. If you look right here and you just go back a little further, look at this 76,000 right here of support from last year in April. This is what they want. They want that shit so bad. The institutions and the banks and all the people that have now understood and studied Bitcoin and realized that there is scarcity in Bitcoin. Circulating BTC supply is nearly 19.9 million BTC are in circulation out of a maximum of 21 that will ever exist. This means about 94 to 95% of all BTC that will ever be created have already been mined. Approximately $1.7 trillion. It's a little more than that. Or let's see what it is right now. What is it right now? It's about right there. And so daily trading volume sees tens of billions of dollars in trading volume, activity per day, recent on the 24-hour. This is as of like December, so it's pretty accurate. Still has an average of $40 to $80 billion range. For example, around 45.5 billion was traded in a mid-July 24-hour period. So, I mean, it still has a lot of money and liquidity trading, whether it be through shorts or longs, futures. I mean, you got so many different markets now that can trade Bitcoin, but the institutional side of it is where we have to really focus on, because Bitcoin is going down too, because it's being flushed by the exchanges. Traders are getting liquidated. And also look at the flows. I mean, it's basically been all outflows. It was only inflowing in the beginning of the year, just a little bit. And then you can see most of it has been outflows. And the same with Ethereum, it's mostly been outflows. It's all been kind of in the red. So if you're wondering why stuff is going down, why the alts are just taking a plunge, that is a good signal of why. But we do think we can find a potential bottom here. And if you look at this particular chart here, we're going to show you, is we also have a price target for Solana. So Solana has this area of support that really sent it off to the races, where a lot of volume was sitting and coming in, because you can see the volume here, high volume. And then you can see right here where we had a nice push into this second range. I call it the Binance range. Why do I call it the Binance range? Because Binance wash trades Solana like it's a washing machine. And so you can see that all these ranges are very much respected. This was, if you remember, was Solana season, pump fun, token mania, all that stuff that was pushing Solana going back up close to its all-time highs. And so this is what was put, because people needed to buy Solana to be able to get into the trenches. So that was a perfect example of network effects of like, okay, when there's hype on a particular chain, it can translate into the actual token that you need to be able to swap with the pairs. This is the same with ETH. It's the same with Solana, or if it's BNB or whatever it is. They have that type of momentum that comes in. And so then with that momentum basically dying off, we're going right back to where we started, which was at $94. So if anything, it makes sense to me that they'll just give us max pain before they pay us. And this just ultimately looks like a big, and you can see it right here. If we were going to be on an uptrend, then we would have made a higher high, but we didn't. We made a lower high, downtrend. Now we have to see if we're going to make a higher low. If we're going to make a higher low and stop at like 110 or stop at like 100, then that would be a good signal. Or right here, we stop right here. This is actually the lowest low right here is that 78. So if we can stop right at 94, technically that means we've made a higher low. And then that would give us some confidence and soul. And that would be a mega, I'm telling you, like I'm watching for Bitcoin and Ethereum to get some entries in these lows here. And we can do this by setting limit orders. You can set the limit orders. By the way, if you want to set the limit order, you want to set it on weeks. We gave a whole nice tutorial on how to actually do this using XRP as an example. And now this is the perfect example that we gave, because if you go back, the freaking limit order that we would have set, given the example on XRP, was right on the damn money. Right on the money. Look at that. Because look, we showed you if the market was going to consolidate and give us these prices again, this was the areas that you'd be wanting to watch. And then we saw this candle area right here. This is being revealed by the 4-hour time frame. And this is something that you can use on any coin. You can use this on any coin. And look at how that just went right into those areas. Perfect. Right into that where we had previous support. Now, when you go into this, remember we said you need to still set a stop loss, because look, we still might have some more max pain in the market. Bitcoin goes 82. XRP is gonna, you would go to the daily, and then we need to see what the daily chart, what that looks like on XRP. We got $1.62 revealed. You do an Alt H, put a horizontal line on there, Alt H, and you just put that on the chart. Also, you can go to Trading View and you can set an alert on this particular price. You can say, okay, like this, it's looking like, man, that is some hot support right there at $1.60. Like imagine you get that, it wicks down there and then it's off to the races. So this is where you need to set an alert right now. You just go here, you add an alert, do the Alt H, add an alert on the horizontal line. You can go to notifications, hit handbell, whatever you want to, or it needs to be like something like an alarm. I don't know. It needs to be something good. I like that one. It's like, let's go. That's the XRP alarm. Okay. And if you have your notifications set on all your devices, you'll get that ding alert on your phone and you know it's time to strike. It's time to join the XRP army at $1.61. So let's see what happens. But yeah, we in the video that we did for gold and silver this morning, check out that video. This was in October in 2025. This was written by Matt Hogan. So it says gold has rallied much more than Bitcoin. Here's why. That's a good thing. The two biggest questions in Bitcoin right now are, why is gold outperforming Bitcoin so much? Why is Bitcoin flat when there's so much buying from ETFs and corporations? As it turns out, if you answer the first question carefully, you'll also answer the second. And it paints a very bullish picture of where Bitcoin is going. And see, this is, I want Matt Hogan on the channel because he would just be, he's so bullish. I feel like he understands the volatility of what's happening right now. and it's just patience, you know? It's just like, we have to be patient with how the new money system is going to be coming through. See, you can either be used in the new money system like they've used us from the last one, or you can be savvy enough to be able to use it to your advantage of how it's going to operate and look. So the question that a lot of people are asking is, why is gold outperforming Bitcoin? And guys, make sure you're hitting the like button, sharing the channel, and sharing the live stream. I think we're breaking down some really good alpha here. So we just got to get the likes hit. And I honestly probably feel like maybe there's not a lot of people watching because they're too busy watching their they're too busy watching their portfolios get completely smashed, or they just had their trades liquidated. So they're probably not paying attention to the streamers right now. They're more so paying attention to the carnage, because when Bitcoin goes down, everything goes down. And there's only a couple of things that end up going up. And that's also another cool thing that you can do is whenever Bitcoin and ETH are dumping, look and find what isn't. Look at and see what didn't dump as much as everything else. What is holding up with strength? You can do this by just looking at your own list of things. You can go to CoinMarketCap and then just go to trading volume, and you can see, okay, let's see what's actually still has high trading volume. Okay, so kind of similar to what my chart looked like on my watch list, is Tron is kind of holding up fairly strong. SUI still seems to have some pretty high trading volume. Hyperliquid, Dogecoin, BNB, XRP. They're not like super crashing. So this is a good way that we can see kind of what is still holding up. And then we can also do this too. We can say, all right, what is up percentage wise in the hourly? Hyperliquid, layer 0. This is perps DEX narrative right here, powering a lot of different applications. This one is interesting. Headband was telling me like his buddy is really into this story IP. So IP is like, it's basically a blockchain that has to do with IP rights. And there might be something happening here because the volume is good. And in the top 100 right now, it's holding up. Then you also, World Liberty Financial had been taking a plunge, it's been in a toilet, and but now it could be coming to its bottom pump. They've been doing buybacks, they've been doing all kinds of things to try and pump the chart. You can see over the past 7 days, it was, up 17%, but 24 hours, not so great, 8%, but we still have to keep pump on the radar for the inevitable good times again. I don't think crypto's going anywhere. I don't think all the people that are in crypto are just going to capitulate, sell, and just all start holding massive amounts of gold and silver. I don't think that's really going to be the case. We still want to keep Bonk on the radar as Solana's flagship airdrop token. We're keeping Crow on the radar. Chronos. We're doing Chronos DeFi by the method of using VVS Finance and Fulcrum. So it's a good way to get some DeFi exposure. Yeah, this is what you can see in terms of the percentage of what is doing good while things are dumping. And now we can look at, really quick before we go, we will look at Bitcoin one more time because I want to see these levels. I want to see the order blocks. We're going to look at it on, we're going to look at it here on the daily. This is kind of the scenario that I'm thinking is a way higher probability of playing out than the market like giving us the prices that we want. I mean, I don't think that's going to happen in terms of recovering fast from this particular candle. And what they love doing too when it breaks down like this, because traders will try and scoop up a quote bottom that they think is going to happen, you'll get a scam candle right back up to 85, and then that's when they trap those longs. They'll trap the longs, and the next level would be to squeeze it to 82. So let's just, it could wick right, it could just go and smash right down just in this candle alone, down to 82 just today, but we'll see, we'll see what happens. That's when you want to just hold the line. So there's 2 areas here, okay, that we want to keep an eye on. We want to set an alert on here. Okay. Let's see. 84. Or no, this would be 82. 82, 322. Okay. So yeah, let's watch for this. And then now let's look at ETH. And then we're going to see some order blocks on here as well as some high potential areas. And we'll price label it. We got one right there. And then we have one right here. So those are our 2 levels that we could watch for as well for Ethereum. So 2,683 and then 2,437. And then now we'll go to, because I know you guys like XRP. We're going to see what order blocks. This is what's kind of like crazy about XRP. You got this $1.60 of a candle right here, but then look at the thing. But see, the only order block that I see is down at $1.31. So it's like you got 2 levels. Now you got 2 levels, pretty key levels here for XRP. Is you got $1.61, and then you have basically right where around this, it's like in between this range, $1.30, $1.33. So let's keep those on our radar as well. Potentially set some limit orders. And what's cool about setting these limit orders is that they are bounce points. Doesn't mean it's going to sustain, but if you get a limit order in one of these areas, say for XRP, say for Doge or Ethereum, and it starts to bounce, you can just, that's either with the spot, cool, you can get a spot buy, but then if you're doing a leverage trade, then you already, if you are smart, you went in and you set your limit, you set the take profit, and it could bump and run from that particular spot, and you already have the strategy laid out. And so what's the strategy after it ends up bumping and running and you're in profit? You trail the stop loss. So say that happened. It bounced and it bumped and ran from $1.30 or $1, wherever it was, or it did it from the $1.60 and it bumped and run from there. Then it went up fast to send your trade right into profit. XRP then goes up 16%. Okay, that means you need to trail that stop loss up in profit. Trail it up in profit. Say you're like 250% up in profit. Now you need to trail that up into being 100% in profit. Scoop off 50% of the trade, 25% of the trade to pay yourself, and then you can decide whatever. Then the trade's just an open trade. It's a free trade. At that point, it's a free trade. And you can decide to do whatever you want with that. You got liquidity to build up the account. You have money to DCA now. You can send it out of the account. I suggest, and this is the way that I've been able to build up an account fast, if you're robotic about it, you can split it. So whatever profits you make, you're always going to take 50% of it and put it in your DCA long-term bag. And then you're going to take 50% and you'll keep it in the account. And then you choose to only risk 10% of that 50% of what you just put into the account, depending on what that might be, because it could have been $1,000. Okay, you just made $1,000. You're going to take straight up off the rip, take 500, DCA your bag, whether it's Ethereum, Bitcoin, whatever it is, and then don't touch it. I've made the mistake. I've touched my DCA bag, and if you're going to be trying to trade these volatile areas like this and you're not locked in, you're going to trade it into the ground. You will lose it. It's a 99% chance. I'm just telling you. I'll be honest with you. It's probably 98, 99% chance that you'll freaking lose it. So don't trade your DCA bag. Don't do it. You only want to risk what you're willing to lose inside of these accounts that you're going to be trading and scalping. So do that. Make that like your no negotiation rule, because the moment you break it is the moment that you will just continue to keep breaking it and you'll screw yourself up. That's the most important lesson I could get across for anyone in crypto right now, is to do exactly what I just freaking said. And if you don't, watch what happens. And you're just practicing really good discipline along with your risk management, and you can really knock it out of the park. So I hope that helps. Make sure you guys are signing up with the links in the description. Make sure you're getting in the Telegram. So the links in the description, I'll just go through them real quick before we end the live stream. Thanks for tuning in. And make sure you hit the like button. I don't know why there's only 2 likes. Ridiculous. But yeah, you can click on the Discord right here, and then you can click in the Telegram, and I hope to see you guys in there. Make sure you check out the video that we just posted about gold and silver and why that is a good thing for the markets. Real quick, we'll show you the video right here. Why gold and silver pumping is good for Bitcoin and Ethereum. You might not believe me now, but if you're patient enough, you might be in here long enough to be able to see what the heck I'm talking about. All right, I'll see you on the next one. Peace out.